أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الرحمن علم القرآن خلق الإنسان علمه البيان الشمس والقمر بحسبان والنجم والشجر يسجدان والسماء رفعها ووضع الميزان ألا تطغوا في الميزان وأقيموا الوزن بالقسط ولا تخسروا الميزان والأرض وضعها للأنام فيها فاكهة والنخل ذات الأكمام والحب ذو العصف والريحان فبأي آلاء ربكما تكذبان صدق الله العظيم.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. Assalamu alaikum everyone. My name is Suhail Khan. I am the company secretary at Meezan Bank. I would like to welcome you all to Meezan Bank's corporate briefing session. As per the regulatory requirements, this session is for the period ending 31st December 2025. So that is the period you would be covering in this session, inshallah. We have with us today Dr. Syed Amir Ali, Meezan Bank's President and CEO, and Meezan Bank's CFO, Mr. Imran Ali Shah. I would just like to invite Mr. Imran Shah to start the briefing, and I would just like to give a quick overview of today's program to the participants. We'll have a briefing by a CFO, and after that, the session would be open for questions and answers. The modality for questions and answers is normal, the protocol for Zoom. You raise your hand in Zoom, and we will answer the questions. And alternatively, you could also put up your answer in chat, and we'll have a look at these and we'll answer the questions. Imran Saab, on to you, please, sir.
Thank you, Suhail Saab. Bismillahirrahmanirrahim. Assalamu alaikum, everyone. As Suhail Saab mentioned, we will be covering the presentation today, and then we would be happy to take any questions which you might have. Let me share my screen. As most of our audience would have already seen, Alhamdulillah, our profit after tax for the financial year 2025 came in at 89 billion, which was down 12% from the prior period. Total assets were up by 23% to close at 4.81 trillion, whereas total deposits went up by 28% to close at 3.3 trillion. Basic earnings per share were rupees 49.54, whereas our total return on equity was 33.8% for the full year. ADR came in at a very healthy 51% compared to a high of 60% in December 2024. And Alhamdulillah, we are now operating with 1,105 branches as at the 31st of December 2025 across 363 cities in Pakistan. During the financial year, we made a total dividend distribution of 28 rupees, or roughly 280%, to our shareholders. Meezan has been recognized for its outstanding performance by multiple sources, including the CFA Society Pakistan, GIFA, the Banker, IFN, and various other awarding bodies. The most notable amongst them has been the Pakistan Banking Awards, where the bank was recognized as the best bank in Pakistan for the third consecutive year and fifth time overall. No other bank has been recognized more than twice as the best bank throughout the history of the awards. Similarly, CFA Society Pakistan also recognized Meezan as the best bank for the sixth consecutive year, as well as the best Islamic bank for the year 2024. Coming to the financials, total gross financings increased by roughly 130 billion or 8% year over year, whereas our gross ADR declined by 9.2% from 60.2 to 51.1%. The main reason for the decline in gross ADR financing were some of the structured financing transactions which were reported on our balance sheet as at December 2024, which had matured during the year. Non-performing financings went up by 23%. These were primarily driven by two accounts relating to the textile sector. Whereas NPL ratio also went up slightly to 1.84%. However, it remains comfortably below 2% and is one of the healthiest in the industry. Our NPL coverage also remains very robust at 146%, which is one of the highest in the industry. During the year, investment book increased by roughly 39% to close at 2.6 trillion, and CASA deposits increased by 25% or roughly 610 billion rupees. CASA mix remained at a very healthy 91%. Our target CASA range is anything above 90%. Capital adequacy ratio, in line with the increase in financing, declined slightly to 19.2%, which is well within our tolerance levels, and we expect to maintain a CAR over and above the regulatory requirements going forward. Cost to income ratio was also 30.4% compared to industry average north of 40%, and our target range going forward is between 35 to 40%. Looking at the year-over-year profitability, the total profit after tax went down by 12%, driven by the net spread income, which was down by 12%, primarily on account of the average policy rate declining from 19.67% to 11.39%. Fee commission and other income was up 6%, whereas foreign exchange income went up from 0.8 billion to 5.5 billion. Other income was up 13%, whereas total operating expenses were flat year over year. The main driver of this was the reversal, a one-off reversal in excess bonus provision in H1 last year to the tune of 10.9%. All the details have already been disclosed in the annual and half-yearly accounts. In terms of quarter-over-quarter profitability, profit after tax came in at 21.8%, which was up 4% compared to Q3 2025. This was despite the average policy rate being relatively constant, and the main driver of the higher profitability was the spread income, which went up by 3%. I also want to highlight that Meezan Bank's profitability has been consistently going up over the last more than a decade, despite the tax rates going up substantially from 39% to 49% and then 54% in 2024. We remain confident that with the rates bottoming out at the current levels, we would inshallah be able to achieve our higher profitability from 2024 in the next couple of years. In terms of the balance sheet, total assets were up 23%. The main driver, as I've explained, was the investment book, which is up 39%, and gross financings, which are up 8%. On the liabilities front, deposits went up by 28%, driven by current accounts, and state bank borrowings also went up by 23%. Our total equity was also up 13%, closing at just under 280 billion, or roughly $1 billion US. Meezan has been maintaining a healthy return on equity and return on assets over the last few years. Although the ROE has declined slightly from the prior period, we expect the ROE to remain in the 30 to 35% range going forward. And if the policy rate cycle reverses and we see an increase from here, we would expect ROE to go up as well. Return on asset was 2.0%, whereas cost to income ratio was 30.4%. And as I've mentioned, we would expect this to stabilize around the 35% mark. Gross ADR came in at 51.1%. Going forward, we would strive to maintain an ADR ratio of between 40 to 45%. In terms of the deposits, our total deposit book went up by 718 billion, or roughly 28%. The main driver of this was the current accounts, which went up by 361 billion, or roughly 29%. Saving accounts were up 251 billion, or roughly 21%, and term deposits were also up by 107 billion. Our deposit growth since inception has been roughly 33%, with a market share of 8.8%. We continue to have a very strong deposit franchise, with individual depositors and sole proprietors making up 71% of the total deposit book, and private sector entities contributing roughly 27%. Our branch network grew by 54 branches during the last year, and this year we are expecting to grow our branch network by a further 100 to 150 branches during the financial year. In terms of the investment book, our total investments stood at 2.6 trillion, up from 1.87 trillion as at December 2024. Of this, roughly 2.16 trillion is in GOP Ijara Sukuk, 400 billion is in Bay modules and Naya Pakistan certificates, and of the GIS Ijara Sukuk, roughly 73% is in variable rate sukuk, whereas roughly 27% is in fixed rate instruments. The yield on the fixed rate instrument is around 11.6%, with a duration of 1.6 years. The bank continues to show robust growth in our financing portfolio, which closed at 1.7 trillion, with a NPL ratio of 1.8%. Coverage remains strong. In terms of the financing composition, the main financing is being driven by top-rated corporate clients, which constitute roughly 74% of the total advances portfolio. Roughly 18% is in commercial and SME clients, and 7% is in consumer finance segment, which includes car ijara and home mortgages. The bank continues to maintain a total provision of 45 billion, of which 13.6 billion is over and above the IFRS 9 requirements. We also continue to maintain a healthy CAR of 19.2%, which is 7.7% above the minimum requirement of 11.5%. Our CET1 ratio was 16.45% versus a requirement of 7.5%, and T1 ratio was 16.89%. In terms of the growth in fee and commission income, debit card related fees were down 5%. This is as part of bank's strategy to roll out debit cards aggressively, where we have been offering our debit cards free of cost for the first year. Trade related fees and commissions were up 18%, whereas branch banking customer fees was also up 17%. Cash management fees was up 30%, and IBG related fee income was up 91%. Similarly, on trade, our total trade volumes went up from 2.7 trillion to 2.9 trillion, or roughly $10 billion US. Of these, 62% related to imports and roughly 38% were exports. Another feather in Meezan's cap has been our subsidiary Al Meezan Investment Management, which is the largest asset management company in Pakistan. The AMC was operating with total AUMs, including SMA portfolio of roughly 724 billion, with an investor base of more than 530,000 clients. Total PAT for the subsidiary was 4.2 billion and return on equity for the full year was 76.36%. Similarly, in terms of key digital statistics, the bank is now operating with a total debit cards portfolio of 4.719 million, which is up from 4 million cards at the end of December 2024. Total POS machines deployed have also gone up from 28,000 to 33,631 machines, and mobile app active users have also increased from 2.4 to 3.36 million customers. Our digitalization percentage has also gone up from 90.9% to roughly 93.6%. Key business risks and the 6-year performance has already been included in the presentation. We would be happy to answer any questions you might have based on the presentation and the annual accounts which have been uploaded on the website. So I'll stop the presentation now, Sohail Saab, and we will be happy to take any questions. Thank you.
Thank you, Nasser. Thank you very much, sir. What we'll do is that before the session, we had received a few questions over the email. So what I'll do is I'll share these questions with the participants and our CFO, and then the CFO and the CEO will address those questions. One question, Imran Saab, is what is the proportion of fixed versus floating rate sukuk in your investment book, along with average yield and WAM? How much of this is maturing in 2026, calendar year 2026?
So I've already answered this question. The mix is given in the presentation, and the duration of the portfolio, including how many sukuk are maturing in the next 1 year, is also provided in note 50 of the annual report. All the details are there in terms of the weighted average maturity and the yield on the fixed portfolio. As I've mentioned, the weighted average yield is around 11.5%, and the duration of the fixed rate portfolio is 1.6 years.
Thank you, Nasser. The second question we had on email before the session is, what's your target current account mix going forward? And what are your deposit growth expectations for the calendar year of 2026?
So in terms of deposit growth, we are expecting robust deposit growth this year, which would be primarily focused on current and saving accounts. We are targeting a growth in the range of 20 to 25%, and we would expect to maintain our CA and CASA mix at current levels.
Thank you, Nasser. The next question is, how do you see the credit cost trajectory evolving over the next few quarters? And are there any specific segments where you anticipate stress?
I think it's too early to comment on the fallout from the emerging situation in the Middle East. So far, we have not seen any deterioration in our financing book.
Thanks, sir. And the last question we got was, what is your cost to income ratio target for 2026? And how should we think about operating expenses growth in the coming year?
I've already answered that in the presentation.
Okay, good. We have a raised hand by Mr. Mohammad Hanif. Hanif Saab, kindly go ahead with the question, sir. You could unmute yourself.
Do you hear me, sir?
Ji, we can hear you, sir.
Yes.
Sir, वेरी सिंपल क्वेश्चन है मेरा, इतना कोई नहीं, लेकिन आपकी जो डिपॉजिट ग्रोथ है वेरी सिग्निफिकेंट है, 28% फ्रॉम 2014 24 टू 2025। लेकिन सर आपकी जो इन्वेस्टमेंट है वो 2.6 ट्रिलियन है, विच इज वेरी हाई, 39% फ्रॉम 2024। हाउ द रिस्क, ये बड़ा एक रिस्क नहीं है इस फॉर्मेट में, जबकि आपकी प्रॉफिटेबिलिटी डिक्रीज हुई है 12%।
Okay, so Hanisab, you're basically, your question is that our deposits have increased by 28%, but our investment book has increased by 39%, right?
Yeah.
And so deposits generally grow organically, and there is a growth cycle in terms of the how the deposits book increases. Investment opportunities depend on multiple factors, including the timing and the size of the auction. And wherever the bank feels that it should be able to, increase its investments, given the market dynamics, the bank has different available options, including borrowing from the state bank in order to increase its investment book. Now, in the future, we obviously would also have some investments maturing, at which point we might or might not want to reinvest that flow of capital back into the investment book. So ये timing इसकी बड़ी important होती है, इसलिए this is not a binary equation between the deposits and the investment book or the financing book going up or down by the same percentage.
अच्छा सर, ये बताइए कि आप इंटरेस्ट रेट को क्या किस पे देख रहे हैं 2026 में?
देखिए,
ट्रेजरी पे 2% अप हुआ है।
So in the secondary market, the yields are already up by 100 to 150 basis points. We were expecting the rate cycle to bottom out around the 10% mark. Given the situation in the Middle East, we are all in consensus that the rates have already bottomed out, and there is room for an increase of between 100 to 200 basis points in the upcoming monetary policy cycle.
ये जो एटमॉस्फेयर चल रहा है आजकल भी, इतना रोबस्ट कंडीशन है पाकिस्तान की भी और वर्ल्ड ओवर, उसमें आप क्या देख रहे हैं? मैं चाह रहा हूँ कि आमिर साहब इस पे थोड़ा व्यू दें, इफ ही प्रेजेंट हियर।
हनीफ साहब, अपना ये लास्ट पॉइंट आप दोबारा रिपीट करेंगे?
ये जो 2026 का जो मामला आजकल चल रही है, जो सिनेरियो चल रहा है पाकिस्तान और वर्ल्ड ओवर का इकोनॉमिक सूरत हाल में, उस पर थोड़ा सा ओवरव्यू दिया आप।
अब ये जो सूरत हाल है ये तो है बहुत कॉम्प्लिकेटेड, और इसके इम्पैक्ट सबको नजर आ रहे हैं। ये तो नॉन इकोनॉमिक इवेंट है। नॉन इकोनॉमिक इवेंट जो है वो फोरकास्ट नहीं हो सकते किसी भी इकोनोमेट्रिक मॉडल के थ्रू। जब ये हैपन हुआ तो कोई दुनिया का इकोनॉमिस्ट नहीं था जो ये फोरकास्ट करता 6 महीने पहले कि देयर विल बी अ वॉर। आई थिंक नो इकोनोमेट्रिक मॉडल कैन फोरकास्ट इट कि वॉर का बैंड होगी। So these are political forecasting. So naturally we are trained as finance professionals, not as politicians. तो वॉर एंड करना तो बहुत हमारे लिए प्रेडिक्ट करना मुश्किल काम होगा, लेकिन जब तक ये वॉर चल रही है नेचुरली देयर विल बी सप्लाई डिस्ट्रप्शन इश्यूज, देयर विल बी प्राइस इंक्रीज इश्यूज, और वो प्राइस इंक्रीज और सप्लाई डिस्ट्रप्शन इश्यूज जो होंगे वो बिल्ड करेंगे प्रेशर ऑन आवर करंट अकाउंट, and with the pressure coming on our current account we may and of course inflation, ये दोनों चीजें हमारे फिस्कल अकाउंट को भी डिस्टर्ब कर देंगी। मींस बजट डेफिसिट भी हमारा बढ़ जाएगा, इंटरेस्ट रेट भी हमें बढ़ाना पड़ेगा इन्फ्लेशन की वजह से, और नेचुरली करंट अकाउंट भी अंडर प्रेशर आ जाएगा और डॉलर भी अंडर प्रेशर आ जाएगा। सो ये तो एमिनेंट है जो नजर आ रहा है। आई थिंक इसके अलावा प्रिडिक्ट करना इज वेरी डिफिकल्ट कि वॉर का बैंड होगी।
Thank you very much.
Thank you, sir. बहुत शुक्रिया sir. Thank you for your question. We have a few questions on chat. We'll take them one by one. One question from Mr. Abbas Khan of DJM Securities is, what is the status of credit card launching process? And the second question from him is, why CAR is so high? Why not utilize the exceeded buffer by increasing the investment book or paying more to equity holders? Imran sir, sir? The credit card status, I think first, quickly we could have a look at that if you like.
इमरान आप दे रहे हैं या should I?
जी आप क्रेडिट कार्ड पे आप आंसर करें and then I can
The credit card is we have an approval in place from our Sharia board after a very long time. Now there is a need for developing the system, the credit card system, which we have already acquired, and it is being configured. And that will take definitely some time, which will be probably by the end of this year, we will be able to configure our system, and then probably in 2027, we will be able to roll credit cards out.
Thank you, sir. Imran sir, the question on cars, sir.
Yes, so let me answer on the second part. Abbas Saab, we do not think that our capital adequacy ratio is inefficient or high. We want to maintain adequate buffers for future growth. As you have seen this year, we saw an increase of 8% in our total financing book, which obviously had an impact on our capital adequacy ratio. And with the regulatory changes that are coming, our CAR would also take an impact of roughly 1 to 1.5% over the coming years as the banking book is migrated to trading book. Now, in terms of your other question around paying more to equity holders, the guidance from our board has been to maintain a consistent payout in absolute terms. And that is something which we would be looking to do going forward. So यहाँ पे जो आपका सवाल था कि whether our car is inefficient, we don't believe it is, because it is important to maintain a healthy car in order to fund future growth, both on the liability side as well as in terms of our financing and investment book.
Thank you, Imran sir. We have a question by Mr. Abdul Ahad Khan. It has two parts. The first part is, what is the main reason for the increase in TDR? Second part is about the current account mix, which you have already replied to, sir. So the question is, what's the main reason for the increase in TDR?
So, Ahad Saab, if you look at the market dynamics in 2024, there was an ADR tax regime in place, which means most banks were aggressively looking to grow their financing portfolios, which you also saw with Meezan Bank, and discouraging high cost deposits, which is why our TDR growth in 2024 was negative. However, now that the ADR related tax has been withdrawn, we are not only soliciting low cost CASA deposits, but also TDRs, which are a net positive to our spread income.
Thank you, Imran sir. The next two questions have already been answered. We have a question by Mr. Junaid Hamad. Do you have any plans to acquire some small size banks in the near future? Also, why don't we open overseas branches as others?
So at the moment, we do not have any active plans to make acquisitions. If an opportunity arises in the future, then that is something which we would definitely evaluate and reach a decision on. But there are no active discussions right now. And one of the reasons for that is, alhamdulillah, the robust growth which the bank has been able to achieve organically since inception. So, can you repeat the other question, please?
It's about opening overseas branches.
So again, overseas branches, the main reason why the bank has not ventured into opening overseas branches is because of the cost of banking in these overseas territories and the regulatory framework that we need to conform to. So if there is a business case and an opportunity, then that is something which we will certainly evaluate. However, up until this point in time, the management has felt that there is not a strong business justification for doing so.
Thank you, Ansar. The next question from Mr. Aftab Bashir of Sherman Securities is, how do you plan to face the challenge of less sukuk issue for Islamic banks versus conventional?
So in terms of percentages, we would expect the issuance of Sukuk to go up. However, Sukuk issuance can be disparate, which is why our investment book has gone up by 39%, which was partly funded by borrowings from the central bank. In case there is lower level of Sukuk issuance, obviously we can replace high cost state bank borrowings with the organic growth that we see in our deposits while we wait for higher issuances. But we expect directionally the number of Sukuk to be issued to increase going forward as the
Thank you,
economy
sir.
transitions towards fully Islamic mode.
Thank you, sir. The next question is why Meezan's deposit growth has been less against the competition? Is this deliberate?
So I don't agree with this notion that our growth has been lower than competition. Our growth, if you look at peer banks, is definitely comparable with most competitor banks. However, the focus for the bank has been on growing in its averages, and our average growth has been in line with our period end growth.
Thank you, sir. The next three questions, they are about economic growth in the country, about increase in our current accounts, competitive increase, and dividend payouts. And these have been answered in one way or the other in the previous questions. So we don't have any further questions from the participants, any new questions, that is. And there are no raised hands at the moment. So there's the last question is the recent trend of banks to split the share price. In the near future, can we see Meezan doing so?
So Amir Sir, would you like to?
Stock split.
Yes.
I think we answered this question last time also. This is not something which is out of question, but we still are unable to understand why this is necessary at this point in time. We also don't feel that the share price is that high that it is no more acquirable. Still, it's like the share price is like $1.50 kind of thing. So we are not contemplating share split at this point in time, but at the right time, we may consider it, but not right now.
Thank you so much, sir. We have no raised hands and there are no further questions on the chat. So I would like to thank everyone for joining us on this session. Dr. Amir Saab, thank you so much for your presence, sir. Imran Saab, thank you so much. Thank you everybody for joining us, and inshallah we'll see you in our next session. Thank you. Assalamu alaikum.
Thank you.